Welcome to The Green Rush, a podcast about the intersection of cannabis, the capital markets, and culture. On a weekly basis, hosts Ann Donahoe and Louis Goldberg of KCSA Strategic Communications speak with the business leaders, financial experts, cultural icons, legislators, and generally interesting people moving the cannabis industry forward. Today, Louis and Ann are speaking with Mitch Baruchowitz, founder and managing partner of Merida Capital Partners. Merida Capital Partners is a private equity investment firm targeting fundamental growth drivers underpinning the rapid development of the legal cannabis industry. The company's investment emphasis focuses on cultivation technologies, products, and services associated with the evolution of cannabis as an agricultural product, a natural plant-based medicine, a constituent in pharmaceutical formulations, and a recreational consumer product. Mitch and Merida are a big presence in the industry, as you'll soon hear in our interview. This is one of those episodes where you're going to really want to lean forward and listen intently. Now on to our interview with Mitch Baruchowitz.
We are going to do this again, Anne, which is record our banter after our conversation. And we just had Mitch Baruchowitz in, who is a ball of fire. I mean, that guy is passion about cannabis personified.
And so knowledgeable. I just wanted to pick his brain all day, which we kind of did.
And he's really, really cool, and funny, and you know, and uncomfortable with me naming names. And every time I'm with him, I do that. I'm like, I will talk to him in private, and I think he was shocked that I was willing to name names and call people out. You know. But
welcome to Louis Goldberg.
Exactly. Hi, I'm Louis Goldberg. Nice to meet me.
And I'm going to find whatever makes you uncomfortable and do it a lot.
It's very true.
Let's get into it.
Let's just get into it.
I hope you enjoy our interview with Mitch
Baruchowitz from Merida Capital. All right. So, Mitch.
Yes.
Merida is one of a handful of, private equity, venture capital guys working in the cannabis space, Can you take us through your origin story? Like, how did you start to work in cannabis? Why did you want to invest in this space? Take us to that moment where you realized that you were the cannabis investing Superman.
So
and what your cape looks like.
Apparently, you want me to talk about the future because I don't think we have that mindset. We're such grinders that I don't think it's impossible to turn your head into thinking anything of a Superman, especially with the challenges we saw this week. But my origin story is really it goes all the way back to 2000 when I was my brother and myself and a best friend owned a day trading firm that we were working sort of on the algorithmic sort of early days. My brother was an early SOS bandit, and our third partner was hit by a car and paralyzed. And through his through very heroic struggle with pain, and he really was always a self-aware person, and he moved out to Colorado in 06 and 07 to try to get off opioids. He felt like opioids really decreased the quality of his life. Very thoughtful guy, very meditative. When we were roommates when he got hit as well, and he just couldn't function the way he wanted to function.
How old were you? And how old
we
were
were
you?
25. He was 24, so he's a year younger. So an incredibly tragic story, but in his, he dealt with the pain. He was always a very thoughtful person and would care more about other people's pain and struggle. And eventually said, now I got to focus on myself. And opioids are completely ruining my existence. May be diminished physically, but my mental capacity is here. And this is ruining how I feel about life. And I need to make a change. And so he moved out to Colorado. And at that time, I was running the legal team of Pali Capital. And which was an incredibly challenging environment, big broker dealer as you know in New York, and so he would send me some of the legal documents, and there was a lot of workarounds being done in Colorado because of the residency, and I started to look at it, and
it was medicinal. It was not.
It was medicinal, but so early days in Colorado. Actually, in fact, there wasn't really a law that allowed it. It was more of there was a framework that
it was decriminalized.
It was decriminalized, right?
Yeah.
So dispensaries started to self-evolve. and growing. And it was around right after the Ogden memo that really changed things, that said patients won't be prosecuted. And that's when Colorado, which felt different than California. I had cousins in California, knew the California industry well. And it was different than like the Venice Beach edibles. This was like tech people in Colorado. It was like that hippie, crunchy culture. So there was like a little bit more of a thoughtful, less pioneering, more of like there's a business here. And in watching the Colorado evolution, by 2010, you could tell that this could easily start to travel east. Even
And
though
it
wasn't
also
even,
presaged, the 2012 where it went legal.
Right. Well, that's So the Cole memorandum, and then Colorado became legal, and through that challenge, watching how they owned like a building that would rent out space to other people, and watching how the business evolved, I really started to get a deep sense. But I was running a family office at the time and doing investment banking, and I started to get really deeply involved in the legal side. And I had a ton of friends in Colorado because I grew up in Long Island, where a lot of people like to move out there. The naturalists. And I started introducing my friends around, and I started really getting more deeply involved in the substructure of like talking to lawyers. And at that time, then Connecticut announced it was going to change its laws. And they were going to give out a small set of licenses based on whatever principles they eventually announced. And I felt like, my public company background and other things allowed me to write like a 10Q or a 10K, and I was going to treat this like a real company. And that's when I really crossed over and said,
so we should blame Connecticut.
Blame Connecticut for having the first for-profit legal regime, which actually helped build programs like Illinois. Without the success of Connecticut as a stable regime, you don't get the states that came after, because a lot of them looked at Connecticut as a test case.
And I'll tell you, nobody has ever said anything good about Connecticut in the cannabis space before. But it's true. I mean, the way you're describing it. But I've never heard anybody say, because people have talked about Maine as like the the first East Coast state, and they've talked about the failures of New York and the failure of New Jersey, but nobody's ever said it's all because
Connecticut's
of
got
Connecticut.
one of the best programs, actually. There's a few flaws in the underlying laws, but for a state that passed a law in 2012, which became a regulatory scheme in 2013, which became an application process, and 4 licensees. Now Curaleaf owns one, Tuatara owns one, and Curaleaf, Tuatara, and and GTI owns Advanced Grow Labs. The one I helped build is still the only independent. They're doing very well. It's well run, but that experience of going through a rigorous 9-month process. A 2,000-page application, which had to be delivered in 10 copies in paper, which was, as a short guy, it's good. I now have a step ladder. Naturally, just 1 copy is enough for help me.
You and I have the New York Jew short thing going big time.
Except you still have a lot more hair, so you've got me beat there. But
dude, I am so flock of seagulls today. It's unbelievable.
Yeah, no, it's great. It's actually quite. It's great to be here. And by the way, thank you so much for having me. I mean, it's incredible.
Love hanging out with you.
Yeah. So and then what's interesting is after we finished Connecticut and found out that we were the highest scoring team, we sort of took a deep breath and said, this is not going to happen again for years. And within 3 weeks, we were getting emails from all of the states like Minnesota, Illinois, places where people were changing laws. And then it just went on hyperdrive. And after 2 or 3 or 4 years of that, there was just a significant difference in opinion in how you could scale this. And I felt like maybe the best way to scale would be to be an investor, to do more of what was more core to me. I didn't want to be like a grower who worked 40 hours a week in front of the plant. While I respect that deeply, that just wasn't. I felt like the opportunity was in helping shape the industry, not necessarily be a grower. And just because my background on the legal side, and I felt like I had a huge advantage in that I understand legal filings, government interaction. I'd done some work for the World Trade Center Recovery Grant Program in 2003. So I had understood what bureaucracy, how it gets shaped, and how it could shape an industry. And I just really wanted to be true to my core. And that's why every day when I wake up and, I have great guys like Max Gerard. Why don't you say hi?
Max, why don't you say hi?
Yeah, how's it going?
So I brought our
Hi, Max.
I brought our rock star analyst, and he's really, he's a partner as much as anyone else. I just haven't officially.
And he's young. He's
this guy's brilliant.
He's like totally like he's young and a handsome dude. And
we're rocking the same hair today.
Yeah, your hair is shorter than mine.
I just got
I told him the haircut.
We're gonna need some photos
we'll get
to
'em.
accompany
We'll
the
get 'em.
pod.
Yeah, we will.
selfies.
No problem, man. We'll do it. So yeah, when we got all these letters from people around the country, like, hey, apply here with us. it started becoming overwhelming, and I realized I was spending so much time on the road, and all my mind share was there, and that's when around 2014, which I know is ancient years to most people, but to me it feels like yesterday. Yeah, that was when I decided that this was something I think I can make a living out of. And then, of course, it just so happens that Grow Generation at that time, I had met them through friends in Connecticut, and they said there's this little hydroponic retail company. They were doing, $1 million in revenue when I met them, and I still was running an investment bank at that point, and I convinced them to take on this client, and I brought GrowGen public. So not a bad decision there. And that's when I realized.
We know those guys well.
Yeah, and I wanted to be a principal. That's the other thing is I didn't want to be a broker. I didn't want to be a banker. I wanted to help these companies shape their governance, their financial, and I just felt that my background was a good analog for, sort of, I'd always done esoteric investing, and this is the ultimate esoteric investment, or it was.
Wait,
it's become
there's
a little
more
normal.
coming. We'll talk about something offline.
Well,
sure.
Yeah, I mean, I feel like the difference between you guys and some of your peers is that you don't just dump capital in and walk away. You own and operate licenses. Can you talk about how you draw the line from investing and operating? Because you just said you don't want to be, in front of a grow for 40 hours a week.
Well, we don't. So Merida, it's deeply involved in a lot of the ancillary companies. But from an operation perspective, obviously the MCP Wellness investment in Michigan was a slight departure from our core. We have invested in some MSOs. It's obviously a space we know very well because in some ways, we were the first MSO because we also won a license in Minnesota. So 2013 or 14, there's 3 licenses that exist. There's an Illinois license, a Minnesota, and a Connecticut, and we were, deeply involved in 2 of the 3. But we don't really operate them. We invest in great operators on that side. I mean, the partners in Michigan, these guys are just incredible retail operators. And, one of the things I had done early on in I guess you could say in the raw data is I felt really confused by how Connecticut was having such an adoption issue with patients. And so I looked at other analogs around the country, other programs. And so I'd spent a lot of time out in Michigan meeting with a lot of the caregivers.
Which is actually a really good medical program.
It's the best. Well, and there was no rules. So it wasn't really a medical program as much as it was a group of patients, a massive group, right, and a group of 72 plant growing, caregivers and an unofficial dispensary business. So in 14 and 15, I was looking at that model compared to Connecticut to try to understand what the friction was to helping Connecticut get to be a bigger program because it was really hard to get patients early on. In fact, there was probably a handful of doctors that rescued that program because no one had ever done this and doctors were scared of losing their DA license. So Connecticut only had maybe 150, 200 doctors who could give a prescription. And in that group, there were like 5 that were doing all the prescriptions. Right. And so, and I think that experience is crucial to framing how Merida looks through everything in such a granular way because you can't replicate that knowledge. Like if you weren't there in 13, 14, 15, you can't pretend to be there. You can't pretend you know what it was like.
So it's guys like you and Cresco,
sure,
and there are a few others.
Pete Cadens. Yeah. If you remember the 3 deep questions I did with him, I told him a story about meeting him in York, Pennsylvania in late 14 when we were like 2 of maybe 20 people crisscrossing the country looking at these medical limited licenses.
That's when we got involved because we were involved with one of the applicants.
I remember seeing KCSA and I was like, who are these guys?
Yeah, we were
There's
involved
no public
with
companies for you to represent.
Well, yeah, and we were involved with an applicant who didn't win the license, but we got more. There were 42 applicants in New York. Yeah, this is New York in 14.
Yeah.
How many?
43.
43. There were 43. Yeah. And the guys that we were working with got more press than all of the other ones, but they were like the 18th
I know what you're talking
ranked.
about.
Yeah, there's the Compassionate Care Center of New York.
And they partnered with
they partnered with the Kuno alum.
Yeah. Sure. So Eric Lerner
and Barry Farkas.
Yeah, sure. So great. By the way, I've gone on to do some really interesting things.
Eric has done some really interesting stuff. And Kuno alum is a great company.
Great organization.
That's when we really saw like the entire vertical space because we had played around with a couple of companies.
2 years after, think about think of the 3 or 4 years I spent with a machete in the wilderness.
You were way ahead of us.
Well,
and we are way ahead of most others.
That's true. And so let me ask you a question because I always think it's interesting that people. It's hard to unless you're in the room. Your guys are formulating your application and you think it's a sure thing. We're surely getting a license. Worst feeling in the world, right? Losing. But how did you feel going into it? You felt like there's no chance.
Actually, we didn't have anything to do with the application process. We were the PR and we were working with a group called the Advanced Group.
Because I did read a lot about you guys before you guys applied.
We got the first. We literally got the very first person on CNBC that was a cannabis executive.
And what did it get you from an application perspective?
Nothing, actually.
That at 250 gets you a Metro card.
Exactly, and that's what we learned, which was that press is not going to help an application. It actually may hurt an application. You just got to have a great application writer and have all of the stuff.
We've learned something about New York later. Obviously, it's...
Oh, they had their thumb on the scale.
Well... So everyone just be aware that is Lewis saying that, not Mitch Baruchowitz, who still wants to be involved in some licenses. But the reality is we finished 13th as a group.
You beat my guys.
Yeah, well, and our application was premised on we're doing this in 2 states legally right now. We're one of only 2 companies in the world doing extract only in a legal regime in Minnesota, Vireo being the other. Vireo won a license. So obviously that worked, but you never know what, like Missouri is about to give out licenses. You never know what works on a license, and I think the lack of unification is actually one of the big opportunities for people like Merida in the space, which is that fragmentation. You know, 2 years ago,
a lot of the MSOs have a really tough time winning organic licenses, right?
Well,
if you look at the big 5 or the big 6, they end up having to buy them. Why are you guys able to win them and they can't?
So I don't know you guys anymore. I actually am investing in licenses myself. I'm doing it in a different way. I think First of all, I think that part of the space is probably the most problematic from just buying licenses, because you have this huge dichotomy between people who have won and think what it's worth and what's it worth to a company like Cresco. And I think, having been involved in Valley Agroceuticals, I didn't win that license. Merida invested in a company that had won one of the New York ones. And I think one of the challenges in that is a lot of the regulators are hyper-local. Like, they may not even understand the significance of Cresco saying, hey, we're doing this, we've had 400 harvests and never had a problem, right? I don't think the people who are evaluating these in states actually even understand to a granular level. They might understand what the information means and how to contextualize it, but they don't really understand how hard it is to do at scale, replicatable. And so they're probably missing some of the nuance and significance because they've never been in a facility. They've never been, they never walked through and understand the pragmatic results of that. And I think, when you look at like a harvest winning in Pennsylvania, and they won a lot, and then in Jersey, I think you're starting to see a little bit of a flip of the switch now, where the balance sheets, where you can do enough. But MSOs are starting to win more.
But Curaleaf hasn't really won much, and neither has Acreage. Acreage has not
never
won
a license ever, I don't think.
Yeah,
except for maybe in Pennsylvania they won something.
Whatever. I mean, realistically, Acreage is a great company, but
yeah. So I think I don't know how much time these companies. I don't know if they have a professional app writer, and I think also a lot of the local jurisdictions maybe think of that as a negative. Like, what's the point of having a Pennsylvania program if you're going to give it to someone who's in 13 states? And I'm not sure if that's a natural, like, regional bias, but I can tell you, having been and applied in a lot of states, there's definitely different regional biases in this country. There's different, there's this concept of Minnesota nice, where early on I just love telling people, because I don't really get to talk about some of the individualistic things, and I'm not going to write a book probably. So, the chance to sit with you and talk about some of the funny things that have happened on the way is, so we were in Minnesota, we were pitching investors in a hyper-local way. Hey, this is something we're doing. We've done this in Connecticut. We're hoping to win in Minnesota. And, if we're fortunate enough to win one of the licenses there, this will be great. And it was a big investment thing. It was at a country club outside the city of Minnesota. It was right outside, and there were probably about 100 people there. And someone in the front row kept looking at the model and asking questions like, what about the ramp in year 2? And I was trying to explain that it's harvest-based, and by year 2 you get into perpetual harvest, and that's when you really scale. And which we've seen to be obviously the truth, except for if your harvest gets ruined, like in some of the big Canadian LPs. But
they lose an entire.
Well, hey, you can read my Twitter feed if you want to know the CanTrust story. You don't even have to.
We're going
to
talk about your Twitter feed in a little bit.
Yeah. So anyway, I'm sure it's becoming more of a subject. Maybe I should just go dark and just stop doing it. But so I was.
Please don't.
Oh, okay. So I was pitching these 100 investors, and I had our partners were there, and some of my partners from Connecticut were there, and this guy kept asking questions, and at some point I just said to the person, so I said, sir, I think, and I could sense a lot of movement in the room. So people were getting restless with having this guy dominate the Q&A. So I said, sir, why don't we talk after? It seems like you have valid questions, but, to be honest, I think the rest of the room wants to move on, and I'm happy to answer every question you have later. And So one of the Minnesota guys came up to me after and he goes, in Minnesota we have this concept of Minnesota Nice where we don't really like confront people. He's like, if that was a Minnesotan doing that pitch, he would have let this guy just dominate the whole conversation. So they bought me a Minnesota Nice shirt.
Oh, nice.
And a week later, it's the shape of Minnesota as the C, because it has like a little bit of a curve, and so those are the kind of experiences. Like again, you can't replicate that. You can't pretend to know the regional biases until you've felt it, seen it. You can't, and that's where I think on the application side, a lot of people are trying to partner with local people, but you realize that that's fraught with its own problems because if you're an MSO, you kind of want to own 100% of it. So you're applying with this let's call it a super tanker, and you're hoping that these local whoever's judging it can understand the nuance and really the excellence that you've achieved, if you've in fact achieved excellence. And so I personally think that it's licensing is one of the reasons why I run Merida and not necessarily a licensing organization, is because I find people like Forefront who have been wildly successful in applications or grassroots or
name two of our clients.
Yeah,
Thank you very much.
So, but no, I mean, but I'm just honest about the guys who have done applications incredible. I think part of that is they're plugged in at a little bit of a different level. Like Forefront obviously has we're doing this accelerator for minority cannabis business.
Yeah, we're going to
association.
talk about that.
So Forefront is, but they're deeply involved in social equity, and I think those elements, those bonus points, are what can be driving some of the local elements. But we're going to see in Missouri, because Missouri is going to be a place where now that the landscape is, there's a lot of public companies, and it's one of the first states that's done this in the last year or two. So it's going to be like the place where the spotlights really shine, and we're going to see, I guess. I mean, I'm really excited to see what happens there. I don't look at rec licenses where it's more of like convincing a municipality to accept you, like the host agreements in Massachusetts, as quote unquote winning a license. It involves its own constituency and its own excellence and its own bureaucracy, but it's not winning. I think of winning a license as a competitive 3-win, 2 men enter, 1 man leave. And New Jersey being the last one. I think New Jersey is going to be interesting, too, to see what happens on the medical side there. So, and I think it is becoming a little bit more like an arms race. But the MSOs aren't winning them necessarily.
Well, are you able, and I don't know if you're even able to do this, but to talk, because I'm sure all of your investments are your babies, who are your biggest winners? I mean, you talk about Forefront. Who else do you look at and you're like, I helped do that?
Oh, wow, in the portfolio, I mean, if I had to look,
or in general,
obviously
it could
the
be
2
before,
licenses I won originally, Leafline Labs in Minnesota, TheraPlant in Connecticut. I was part of a Nevada operation as well. Whenever you win a license in the early days, I mean, in theory, you're kind of going to be successful naturally by owning one of the 4 growers in Connecticut. Those guys have gone on to do an amazing job and build a real business on it. I'm not involved in that business anymore. Obviously, Merida is something that I spend the 168 hours that I'm alive every week on, and some hours that probably don't exist. But, I think the biggest, if you look at portfolio, because I think that's just an easy way to quantify it, the biggest winners in the portfolio that I feel we've really built, not just sort of invested, GrowGen, Kush Bottles, us helping Kush Energy get off the ground when we brought Summit.
Boy, you just keep naming our clients. It's a beautiful thing.
Well, hey, I mean, you have every client. What am I supposed to say? But I think those are winners. Obviously, the MCP Wellness and the new MSO we're creating from scratch with one of the subsidiaries of Sol, which is called CanCure, and that California, Florida, Michigan type is really intriguing, and what we've done in Michigan is really intriguing because of the operators there. I look at companies like a New Frontier, that a lot of people, digital adoption's been difficult, and a lot of people don't really understand from the outside looking in how much they've achieved. But I think pretty soon you're going to see the power of data, and as it accepts, and even you, Lois, I saw your the raised eyebrows. They've really accomplished a lot, and you're going to see pretty quickly.
Well, we stole Gretchen Gailey from.
Oh yeah, I love Gretchen. I mean, look, in the space there's. People leave companies for a whole variety of reasons. And, one of the things, my next commentary that's kind of bouncing around my brain is an extended metaphor that talks about how you have to right-size your company based on the vertical and even capital. That big isn't necessarily, huge isn't necessarily better. And it's already kind of formulating, because I really had a lot of fun writing the Lemons, and I hope you had fun reading
it. Let's talk about Lemons, right?
Yeah,
because
sure.
Everybody shits the bed occasionally, right?
Yeah.
So it's easy to trot out this was a 20x return. This was a 10x return.
I don't think I did that, though, did
I?
No,
you didn't. You didn't talk return, but we asked, who your winners are. What are the home runs?
Oh, yeah. So vapor dosing. So just let me finish that thought for a second. Obviously, there's there's looking at our portfolio. I think it's 29 companies now. The newer ones, I guess the jury's going to be out on those a little bit. But when you look at Fund 1, the core Fund 1, Steep Hill, GrowGen, Kush.
Well, can you just step back and talk about what that means for our listeners?
Well, so I'm on my third fund. And
how big are each of the funds?
The Fund 1 was $15 million. Fund 2 was $55. That money was raised in about half the time. And then Fund 3 is already in the mid-20s. And we've launched like 8 weeks ago. The biggest limiting factor was you're only allowed to have 100 slots if you allow accredited investors. And just to be true to the democratizing effect I want to have on the industry, I've never wanted to move to hey, write $1 million check or more. So I've wanted to keep accredited as the core constituency. Now it's become a real limiting factor to a point where we are moving to the QP model, which gives you more slots. So Fund 3 will be much larger, but we also see an efficiency in having a larger capital base. But, in terms of when you look at Steep Hill, the fact that we had to change management there and my partner, Jeff, is now the chairman, and that we've almost had to rebuild that company from scratch in partnership with other significant investors in the company like Gotham Green, Fido Partners, the CEO, Andrew Rosenstein. That can be, sometimes taking what could have been easily a zero. A lot of people know the original CEO of Steep Hill, David Lompoc, and then J. Michelle Keller after. They might be brilliant visionaries, but the company wasn't working. Right. And, our governance is a lot of what we do. And we just saw that it needed to have a change. It needs to be a high performance lab. And so sometimes success can be on a relative basis, but I look at, there's not much in our portfolio that we've looked at and said, that's just an absolute disaster.
But everybody has a loss, right?
Well, as of right now, nothing's been closed at a loss. There are companies that are growing at slower trajectories, but we have we're doing more high conviction, so we're not really venture. So if you're investing in binary outcomes, you expect to have, if you're investing in a company at $1 million valuation and it goes out of business, or if it goes to $5 million, you've made a huge winner. But we're trying to write, more concentrated checks into more high conviction. So companies that have revenue already. So there could be a slower ramp, but we're not investing in companies that are pre-revenue. Or one of the few ones we did is vapor dosing, which I covered in Lemmings a little bit because we're excited about where that's going. I don't think our methodology is venture. It's a hybrid. It's opportunistic. And because we're so strategically involved, we have our hand on the pulse.
Well, you're doing the same thing that the Paxies are doing, right? And you're doing what Matt
Sure.
Different.
Sure.
Everybody is different.
There's a lot of great investors. I think Merida's investment methodology, what really differentiates us, and virtuous or not, right? People can judge for themselves, is we are deeply involved in elements of companies that other people may feel are too granular for their bandwidth. That's why I have a bigger team. When you look at a fund, that might have 5 or 6 people. I have 22 people who are grinding through information, who are out there on the front talking to our companies every day to understand what they're encountering so that we can be proactive on helping them avoid disaster. So we've been lucky. Some of it's luck. Some of these companies, it's hard to predict how a company's going to deal with X, and then X occurs. Right. I think what we try to do is instill a philosophy of, that we're going to be like the big lion, in the Lion King behind Simba.
Yes.
He growls and the hyenas go running away, but it's really the big lion behind them that's scaring them. And I don't mean from a scary, but we're trying to be capital. And, it does help when you have an investor who, if you're running into capital problems and you can say, hey, we need 250 or 500 to bridge us, and we can come to a decision pretty quickly on an existing portfolio company, that's a really virtuous thing, provided that they're operating in a way. So I think we help shape the behavioral concept of it. And, if you know from Lemmings, and we do a lot of research on behavioral economics and stuff, and we just are deeply studied on the companies we invest in. And I think that that takes people and money. And I think that's why Fund 3 is really, for me, it's definitely closer to the vision of what we always wanted. We had our own friction. Fund 1 was $15 million. That's so subscale. It's like, it's almost not worth it. There was a point in December of 2017 where we're like, are we going to make it? Because this is small. Maybe we should just go back to licenses and doing our strategic thing. And, we had a real existential, like, is this worth the amount of pure,
and it was
unmitigated work? Well,
far.
Look, 2 years later, almost, it feels like that. But, try not to get me misty-eyed, because I will, I don't think about it that way, but it does feel like that existential crisis. And I really have to thank the team, the friends, Kevin Gibbs, our COO, and Daisy, who joined us, who you've met, and she's wonderful. People like Max, who have joined, Jeff Monat, who joined us, who was an original investor in Connecticut, the investors who believed in us.
Is Danny Moses a
Very
GP
involved.
or he?
Yeah, so he's a partner essentially.
Right.
In all,
Look,
but
we
he's
love
on the
Danny.
investment committee.
Yeah,
so
I
he's
mean-
on the investment committee. So obviously deeply involved. But Danny's the kind of guy that if you're not getting a call every day on things that you should be doing better, then you're not getting the best of him. And he does that every day. And I probably spend too much time on the phone with him because I learn so much every day. And
He's so fucking smart.
yeah, it's just and I think I wrote
But
it.
but I have a question.
Sure.
How much of that time is him spent talking about shorting Tesla?
Come on, I thought
He's
about
right.
things I don't talk about. I talk about that on every podcast. If you talk to Danny, he will bring up how Tesla is essentially in his mind a scheme.
A Ponzi scheme, he
Yes,
calls it.
yes. I'm going to let you see.
I'll say it.
See
I
how
have no pro-
diplomatic I'm
I have
becoming.
no problem
Louis?
saying
See how
it, man.
diplomatic I'm becoming. I'm learning.
Yes.
But no. But I think with Danny, because I brought him into cannabis essentially, right? I think one of the things that I wrote this internally to the team to thank them really for their support in everything we're doing. And this goes to the Tom Harrisons of the world. The chairman emeritus of Omnicom joins Merida to help us run companies. Pam Galassini from Medco. I think the reason with having those people involved means you're having such high-level conversations every day that it allows you to scenario analyze what your companies are doing. And I think that is part of the reason why we haven't had a real disaster yet.
So just to remind everybody, we're talking with Mitch Baruchowitz from Merida Capital. So let's pivot for a second. You and I were talking earlier about what's going on in the MSO landscape, right? We're recording this on July 12th, and the biggest news for the last 2 weeks in cannabis was the firing of Bruce Linton, right, from Canopy. And it was because of underperformance, right? The Canopy, they're not growing, they're not making money. None of the MSOs are really.
Well, I wouldn't call Canopy an MSO. We use LPs. I mean,
Okay.
they are different companies. Though.
They are a different company, but if you look, their investment in acreage is one thing, and but if you look at the big 10 or 12 MSOs out there, none of them are making their numbers, right? And it's not. They're not. It's like they.
Yeah, I've been doing this long enough that maybe I've created an internal elastic engine that allow. But you're right.
But they
you're
all
right.
came out saying, look, some of them are saying we're going to do they said we're going to do $400 million top line this year. We're going to do $300 million. None of them are going to come anywhere close to that.
Well, we're going to see, aren't we?
Well, but a lot of it was
But I remember being
predicated.
pitched
They were
like 4 years
predicated
ago.
on Massachusetts,
Right.
And because Massachusetts is such a shit show, they're not going to make their numbers. So the question I have and I had, I believe that we will see a major culling of the C-suite coming. And I don't know who's going to go.
And I appreciate you saying the same thing in public that you said privately. I think that,
Yeah.
by the way, that's us too.
Yeah,
Pretty
So-
much. That's my Twitter feed.
Right. Like I think, and it's these guys are like you. They are financial guys, right? They know how to go and buy licenses. They know how to financially stitch together a company. But when it comes time to opening stores, driving people into stores and buying product,
The
that's not what they
logistics
do.
is challenging, and having seen that from the ground floor for years, right? You're coming on almost 6 years from the first license I ever won, watching that team build that from the ground up. Now that was a grow only, but so I let me start by saying one thing, which is if you're a private investor or an investor in general, and you invested in a company where the driving factor in your decision was what their 2021 numbers were going to be, which we saw a lot of decks, then you really have no reason to complain. It's on you. And I'm not saying I'm blaming the investor, but I mean, going back to Lemmings, I don't want to, I'm going to post it on Twitter, by the way, so people can read it. But isn't that the point I'm making, which is really sophisticated people who just wanted exposure early on? They took the exposure that was available to them, and now they're making more sort of targeted decisions, which is really creating a landscape shift in the space, which could lead to expectations of performance, which could lead to a culling of those people. Now, I can't say why Bruce was fired, to be honest with you. I really.
Well, he'll tell you.
Well, that's true, but
He'll tell anyone who'll listen.
Right. Well, I've heard that. In fact,
We want him back on the
in
show.
fact, I think as we were walking
Come sit
here, there
next to
was
me, Bruce.
Will tell you my story for food on the streets outside of Medmen's dispensary. But no,
Gone. That one.
I've never seen a person in it. I mean,
I've been in it.
you've been in it, but we walked by right now, and
So you're the one.
there's no one in it.
But you can't buy anything.
Well, look, I don't know. I can't. I think the New York program gets a really bad rap. I really do. I really do, because I know a lot of patients who are getting product from Vireo and White Plains. Vireo being one of the real medical companies.
But that store,
but that's just not in the right place. That's not in the right place.
No, but they put that there because
know why?
they wanted to have, that was a dick measuring thing.
Look, I'm letting you say all these things, so I just want to be clear. I don't know. No, I'm not just commenting either way. Because, but I
big head nod, by the way. I got the big head nod
because I'm just trying to be in front of the microphone. But no, what I'll say, what I'll say on that is, New York and California have much different, people. People in New York are going to use delivery because that's the way that they've been getting cannabis forever. Hold on,
bullshit.
Well, and everything forever.
Yeah,
everything forever. And let's be straight. If you're a business person who is using it medically and you're inclined to go into a store, you're not going to do where half your colleagues are walking by. See, in California, if you're on Sepulveda and you're going to MedMen, Sepulveda near the airport, you're there because you want to get product. For most people, it's probably because you're flying out.
Right.
But whatever.
Or Abbott Kinney.
Abbott Kinney.
Yeah.
Those are great dispensaries, and they make sense. A dispensary on 39th and 5th, I think, is a challenge because of just how New York operates.
Well, I don't know if
but
I
think
agree
long
with
term
you.
it'll be really successful.
Eventually, yes, long term will be really successful.
How much are you willing to lose to get there?
Yeah,
that's the story about, but that's what you're asking about MSOs is, if you're trying to land a 747 on a 3,000-foot runway, you're going to have a problem. If you're trying to land it on an 8,000-foot runway, you're going to be okay. And I think a lot of the companies have to think of it that way.
Do you fly planes?
I don't fly.
Oh.
I mean, I fly in them. if you're in cannabis and you're not traveling, there's something wrong. Yeah. In fact, I won't even do the YY. The Toronto to New York has become the worst flight.
The YYZ?
Yeah, it's become the worst. It's like 9 hours for 14 minutes in the air.
Were you ever a Rush fan?
I mean, I know Rush, but
yeah, but just because they have the song YYZ, and until I started doing that flight, I didn't know what it was.
It's and if you do a Friday flight, it's likely you're getting canceled, so you better get ready to stay in an airport hotel till Saturday morning.
It has happened to me.
It's happened to me 6 times.
Yeah, it sucks.
Yeah,
I mean,
which is why
Toronto's a great town.
I mean, we get excited. We open an office there, and then literally it becomes the worst flight in the world to do. Almost to a point where I'm like,
go out of not Billy Bush. You got to go to
Porter.
Yeah, Porter Air is the best.
Yeah, the problem is then you have to go to Newark, and I live in Westchester. So it's inconvenient in general. But hey, to Merida investors, even if it's inconvenient, if it makes money, we're doing it. So don't worry about it. So in terms of the MSOs, I think that they're about to enter a really challenging period, which is we're moving from you can sell me a narrative to I want to look at your numbers. And I think that is going to bring with it significant performance issues.
Well, they're going to have to do the Amazon thing, right? Amazon lost money until it made money, and it lost money forever.
I love when people use like the best example of a success as the rule. No, I mean, I think that there are going to be companies whose their numbers may not meet the standard, but they're on their way there, and that's okay. It depends on how much capital efficiency they have. It depends on a lot of different factors. Now, one thing I would say that might be the biggest thing people should look for is if your SG&A is really high. I mean, one of the reasons why Trulieve has been so successful is because they were only in one state. They dominated that state for a long time, and they didn't have to travel to 14 different states like an Acreage or a Crate, and they didn't have to do all these one-off deals to get the licenses. And so for Trulieve, that's why Trulieve has an efficiency curve. Like we have almost like an efficiency score on each MSO. They have a very high. Well, you're a busy guy. I guess your phone's ringing in the middle of this.
I forgot to put this on this Do Not Disturb. So, first time ever.
Yeah. Well, I always want to be the first. So I think when you
just
look at
be gentle.
Yeah, sure. Yeah. God, that's terrible. So when you look at Trulieve and you look at I know, Ann, if you were here to see what's happening here.
I'm kind of glad I'm not.
So when you look at that efficiency and Max, if you want to chime in on this, we have like almost like an efficiency score on MSOs where Max at the end of each week gives us like here's the MSO comps. So one day I was like, hey, what have you been doing the whole morning? He's like, the MSO comp sheet. So we track this even if we're not invested in each one. We look at it as like we want to know like which.
Yeah, I mean, I would say, there's a couple of points, which is like, truly, if you look at that, they're already posting something like 40% EBITDA margins.
But there's a reason.
Yeah, there's of course a reason.
I mean, why.
And then when you talk about Amazon, they lost a ton of money, but they actually had really good cash flows, right? And they had a really good cash operating cycle. And so I think
that their competitors were going out of business.
Right.
Books A Million, Barnes & Noble, they were killing bricks and mortar, so you could see just like Starbucks, the old Starbucks model, like flood the zone,
right? These
and
guys
then close the Starbucks.
This is completely a conversion industry, right? We are converting from the illicit market to the licit market.
And when it gets legal and capital is more efficient, you may get to a different mindset. With capital inefficiency, the one thing that I always look at, first thing I look at is what's the SG&A. because ultimately, and this isn't a judgment on any individual MSO. I think each MSO is going to have its own virtues and its own cons. I think the thing about the efficiency is how they spend their money now, because now that they're getting capital's a lot tighter for them. If you blow through that money, you're looking at, we saw the repricing in MedMen with Gotham Green. We saw that a lot of the
okay, just off the record,
Yeah.
when does Adam get fired?
Just off the record while we're
recording. You don't
no,
actually have
I
to
don't.
answer
I
that.
actually,
and I like
I personally,
him personally.
it's not even not liking him. I think Adam is a visionary. I think that I actually don't look at MedMen. I don't think the problem with MedMen. First of all, I don't think there's even a problem because we're not following it day to day. What I would say about MedMen is, the underwriters. Adam paid people a lot to be
including himself.
Hold on. Let me make my point before you jump in with the snark, because it's actually a valid point that I want you to consider. And you tell me if I've changed your mind. Adam paid a lot of people and have made a lot of people a lot of money to be the substructure underneath his vision. And maybe instead of just blaming him, maybe we should look at those people, the underwriters who took him public, that they should have been strong. The areas he didn't know, he paid people to give him that knowledge. And I personally don't think it's like an Adam issue. People, look, we hear
He's
this
an
a lot.
easy target. I'm not
But it's
being
not even
serious.
but I don't understand that, because I personally think like an organization with 1,200 employees, more professional advisors than, look, there was someone from BlackRock who joined in their funds. Clearly, if governance was an issue, is it unfair to say, what did Adam bring him on for? Adam brought people on who could help him get to somewhere.
People don't like Adam because of his personality.
I personally think I find the guy, when he talked at NCIA in Boston,
great.
I was inspired. I personally think that, I don't know why people. I personally, I'm not here to defend or otherwise, but I actually think, and I've been fair on Twitter, or at least some people think very, very tough. But I personally don't think that when you look at companies, if I pay someone to be a CFO, and that person, like CanTrust as an example, CanTrust has a board. They have other people. Everyone's like, Peter Assetto has to go. How many people were involved in not catching what were clearly, like, if you have 4 licensed rooms and they produce 2,000 kilograms one year and the next year it produces 46,000, maybe someone on the board should have been like, hey, by the way, how do we produce all this if we didn't have these licensed rooms? I don't think you can blame the CEO alone, just like in MedMen. I don't even know if there's systemic problems. I look around and I look at a lot of people who have built better organizations because they've learned from MedMen. That's what I see. So I'm not trying to convince you, but I'm saying,
listen,
like,
I have to tell you, he is an easy target just because.
I don't think he's even an easy target. The guy's smart.
He's smart, and when I saw him 2 years ago at the Cowen conference,
Yeah.
he fundamentally changed my perception on how to think about the difference. He's
things
really
that other
sharp.
people haven't been there. I first met him in 2014. They were pitching us Desert Hot Springs, one of their grows, when I had just done Connecticut, and I was kind of interested in like looking around what's in the world. And I heard to me, it was like it all made sense. These guys knew what they were doing. They knew how to hire people correctly. They knew how to manage these. So I personally don't think anything's changed there. Now, if anything, I think I separate the business from the corporation.
The culture's got some issues.
Yes, the corporation. But again, if you're a brilliant visionary, and by the way, I was at a great thing called Capital Camp 2 months ago. That was not about cannabis at all. It was about leaders in certain spaces talking about, and Bethany McLean, who wrote The Smartest Guys in the Room about Enron, and someone asked her a question, what's the difference between a visionary and like what's become to be known as a fraud, basically. And she answered, a bunch of things, and there was one thing, everyone in the room was transfixed, right? And Patrick O'Shaughnessy, who was doing the interview, who, he runs O'Shaughnessy Asset Management, brilliant guy. He said something like, if Danny Moses was here, he'd ask you about Tesla. And I think one of the big differences between a visionary and a company that goes off the rails, because I just finished the book on Genentech. Why did that company stay tight for a long time? The difference is the governance substructure. It seems to me like visionaries who can hire enough people around them.
With Theranos, right?
That's the same thing. If you can find people around you who have enough thematic knowledge so that they know that you're doing the right thing, but also the governance background and the ability. See, one thing at Merida that we have like a methodology, and I realize that a lot of companies should have respectful disagreement and confrontation is the way you get to a better answer. And I think sometimes in these companies, they're scared to confront, like a board guy doesn't know what he's doing, so he doesn't really confront the visionary. And what happens is it just becomes too much of a deferential relationship. And so when you have a frank and candid relationship with your portfolio companies, you can say to them, that's not how you do it. And I think the CEOs and the visionaries who can actually cull their behavior to be more in line with a normalized remember, the business can be great, but if the corporation isn't built right, that's where you're going to run into problems. And that's why for men, maybe the corporation has a problem, but the business, I mean, these guys know how to run stores. They know how to build stores. They know how to get product on their shelves.
It's the best. It's the best consistent retail experience I've seen.
Yeah, so I can't. I try not to use the best because I haven't seen each one, but
no,
but they're great.
What I said that I've seen. So all right,
so
we've cut Ann off. Let Ann ask a question.
The men people who crush me on, who always are hitting me on Twitter for being tough on them, just be advised. I just spent 20 minutes defending your company.
We'll make sure that we promote that. So Mitch, you've mentioned this Lemmings thing a couple of times, and I'm sorry, this is a dumb question.
Not
Lemmings?
Lemmings.
I thought it was okay. I'm sorry.
It's lemons
That's
or lemonade.
So Lewis, I was right.
I'm wrong.
It's based on
because I was like, what is this lemon thing?
Yeah, so
and he's like, it's Lemmings.
So lemons or lemonade was the recent commentary. So most people, it goes out to like 1,500 people, and we add people to the list, but it's kind of like we write this. I would say it's a data-heavy, information-driven analysis of an area, and then we use metaphors that people understand. So this one was about a Nobel Prize-winning essay about asymmetric information and how it can shape markets and how it almost destroyed the used car market in the 70s, and that using that extended metaphor, and then the metaphor of what automotive technology was like in 1920 when people were getting mangled by a car, a bicycle, a horse, a tram.
All at the same time.
All at the same time. The information coming together in different speeds almost made it impossible. Detroit being the worst example, but New York's where they had professional chauffeurs, the death rate, the incidence rate was much lower. So I used that information to sort of show how cannabis, there's certain people that understand that speed and can contextualize it. And if you're an individual investor and you're dropping money like $500,000 or $1 million at a shot into companies just because you met them at like Green Table or at ArcView, you may want to rethink your strategy because you don't know those companies as well as you think. And I was just making a point about how, and here's 5 tips to how you can look at a company to get to like a Merida Light, analysis. So it's lemons, not lemmings.
It was my fault because I slacked her because I thought
I wish I would have thought of that. That would have been a great title.
Because I thought
lemmings or lemonade.
That's what I thought it was.
I'm not that
because I'm not on your list. So
yeah, I think you are now, but we'll make sure to get you on.
Okay.
There. Well, because you forward it and charge people $100 to read it, so
I'll pay for it. It's worth it.
No, never. We're democratizing the industry.
Can we talk a little bit about your partnership with the Minority Cannabis Business Association? We just spoke with Shanita Penny yesterday, actually. And can you just talk a little bit about that, what it is and why you did it?
Well, we did it because we want to see, we think that while everyone acknowledges that...
what is it?
Okay, so it's a partnership by which we're going to fund Merida. We are carving out a piece of our Fund 3 to deploy capital specifically into either minority, women-owned, disadvantaged, criminal, whatever that disadvantage might be. We want to invest in those businesses, and we think that if done the right way with the right stewardship, that those businesses can then take lessons that they can then amplify in their own way, sort of a pay it forward. And we created it really because I'd been watching what the Minority Cannabis Business Association has done. A very scrappy organization. Shanita, Brandon, Todd, the whole team. If I'm forgetting anyone, I'm sorry. But that team is amazing. Jessica Velasquez, I think, is another member. And I've watched what they've been doing, and I wanted to make a difference. I didn't want to just be someone who always talks about how we should do this and it's a great talking point and not do something. I wanted to actually... putting it through the Merida filter, I felt like we could find some great businesses, and we've gotten, I want to say somewhere around 60 applications so far, and some of them are wildly intriguing. Some of them are mature businesses or more mature. Some of them are totally startup. A few of the applications haven't been great, but I'm excited. I'm excited to work with these companies, to have them in the Merida offices, to interest them in our portfolio and show them. Gives them some strategic help because it's not just about starting a business. I think one of the things that really concern me is the social equity.
Like there's guys like Keith Stapleton who have Purple Heart out in Oakland.
Keith Stevenson.
Keith
Stevenson, Purple Heart Collective. I love Keith. Keith's
right.
a wonderful. I mean, I hope he applies. I'd love to fund his business. And in fact, I tried to get some fund too. He needed some capital. He was trying to build a grow. Yeah. I think one of the challenges is that first of all. Is that everyone might not have seen, so we'll tweet about it, and I'm glad you guys brought it up. This won't come out in time for that, so it closed on the 15th because we didn't want to have it open forever. But
Fund 3?
It's Fund 3. No. Fund 3 doesn't close. The
applications phase.
Because and then we'll have new ones. But of the 60, I think we could end up having a relationship with 30 of them. But one of the things that concern me is a lot of the ways that government is addressing the disproportionate criminality of minorities or the war on drugs, and is to just say, here's a license in LA or here's a license in New York. And running a license is a hard business. It's capital intensive. So if you don't give anyone anything else, just giving them a license might lead to where they can be taken advantage of. Or so with us, we'll negotiate valuation with them in a fair way. But we're also going to give them our whole portfolio's doors are going to be open, our management time, anything we can do to help these businesses, just like we do with our rest of our portfolio.
You're not money. You're smart money.
Well, I don't even. Sure. Well, thank you for saying that.
But I mean, it's like you're taking an act. It's not like you're just giving them a check. You are giving them.
I expect them to
their
work in our
experience.
office several days a month, so they can be there when we're meeting with other companies, and so that we can be relevant to them in an impactful way. And it's also in some ways to help them build look. This isn't a judgment, but just giving someone a license. How many companies have just turned a license without capital or without any type of stewardship into a successful business? Almost no one. Now, maybe you get lucky and you sell that business to someone else for more, and then they come in and so maybe you made a good trade. But in building the businesses, some of the models, one of them is around educating people of color of the virtues of CBD. These are interesting business models where I hope to learn as much as I teach, and that's just our way. We don't really. I know people make this joke about how Meridas, we're not shy to say what we do well, but the reality is we're still learning just as much every day. Every day is a learning experience. CannTrust is a learning experience. Bruce Linton getting fired is a learning experience. And
for everybody.
For everyone. And we want to have our ears open. And I think, once you think you're Goliath, then you lose that David mentality. And anyone who's been around us for more than 3 seconds knows we still think we're David.
Okay, so we're just about out of time. Okay. We have one more question, which we ask everybody. It's called While You Were Sleeping. So what this means is you wake up tomorrow, you open up the Wall Street Journal or the New York Times, and there is the story, the most underreported story in cannabis. What is the media missing, and what should they be recovering? Because, there is not enough coverage of...
Well, I'm going to sound a little bit like a broken record because I write about this a lot. But I do think that when you look at how the medical industry in a normalized way operates, and there was a recent article on JAMA, the Journal of Association of Medical, the American
Journal
Medical
of American Medical Association.
Yeah, which is an impactful journal. When you look at how doctors and practitioners and anyone in the healthcare industry consumes information, or how they get behind a medicine or anything, we're the nascency of the medicalization of cannabis and CBD, the nascency of the structure around what this looks like when it's a personalized medicine, and everyone can say, based on my blood type or based on what I have or what I'm taking, here's the cannabis I should consume. Or here, when you think of what that medicalization looks like from our investment in CB2 Insights, which is a medical prescribing and data company.
Client.
Amazing. I think I might have recommended you guys to them, actually.
Thank you.
But when you look at what that looks like, the little friction elements that have to go away, and the commentary I wrote before was about how Advil became a medicine and how it took 25 years. Anandamide was essentially discovered 25 years ago, right? The endocannabinoid system. So Dr. Ravi Mashulam, and when you look at that.
Client.
Right. Oh, God. So I'm going to try to now you're making me dig in for a non-client.
Sorry, I'm sorry.
But when you look at...
MedMen's not a client.
No, MedMen's not a client.
Well, now we know Lewis talks his book. It's terrible.
I know.
But
we know
when
why,
when you look at what the medicalization means from a reimbursement, chiropractic care, 1980s, quack medicine, insurance starts to look at the cost-benefit analysis, the lowering of opioid usage or other medicines and other general wellness, all of a sudden starts getting reimbursed. More applications to chiropractic schools, more holistic medicine. So when you look at the changes that radiate out from a more acceptance, what gets acceptance? Information, data, research, et cetera, and we're really young on that. And because of that, the system that is being changed in your body we're only 25 years into knowing that system even exists.
Yeah, there's only 6 medical schools that even talk about the endocannabinoid system
exactly.
in the US.
So when you look at how young that is, so what Merida has done as a thesis is we're starting to look at what those friction points are to cannabis becoming that segmented, molecular-based. And I'll tell you, that's to me, the unwritten story isn't about the sexy part about, $1 billion of sales in Colorado. That's great. But when this becomes a medicalized product, similar to how carboxylic acids became the underpinning of aspirin, Advil, blah, 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 whatever. When you look at that, you're talking billions and billions of dollars like the snap of a finger. And, what does Pfizer spend on botanical, medical, and research? And when you look at that, this is like everyone's going to look at the Constellation canopy and be like, yeah, that was... Do you remember that first $4 billion? Because Pfizer just put $20 billion into stuff. Right. And I think, and I'm not saying, maybe it doesn't happen that way, but when I look at the medicalization, I think that is the biggest unwritten story to this day. And I keep talking about it maybe because I've made investments that sort of, solve some of those things.
So you mean you're talking your book?
I'm not talking my book because I'm not talking about a company per se.
I'm teasing
But
you.
no, I know, of course. But no, I think that is, and don't you agree that is something you don't read about every day?
Every day.
But you should be reading about it every day.
Well, but the reason is they're not doing the research,
90%
right?
90% of the doctors in this JAMA, and I'll forward you that article, 90% of the doctors in this article admitted to learning more from cannabis usage from their patients. That tells you there's no desk reference, there's no this, there's no that.
Because it's a Schedule 1, because the FDA is, and Marvin Washington is going to get that changed. His lawsuit is going to get it changed.
That's actually, again, the other thing I think isn't talked about a lot, last thing, is there's been 60 administrative law decisions that have mandated reimbursement of cannabis usage. And we know there's a Supreme Court case that with cannabis. So there's been the most recent one was Egg Harbor, New Jersey, had to reimburse one of its workers whose workers' comp is good. Think about it. If a guy's using a forklift, he cannot use opioids, right? He can't use it. But if he throws a CBD patch on, his pain goes down and he can go back to work. If you look at the amount of billions lost every year on workers' comp, time lost, that's why the medicalization, in my opinion, and by medicalization, I mean the broad spectrum of what has to change in our society. And I want to make one shameless plug. On Monday, and this is another look, is I wrote a little bit about the disruption of cannabis, the coming disruption on elder care, assisted living, and stuff. And I'm speaking at an assisted living and I forgot IL, I think it's called independent living and elder care at a conference that has nothing to do with cannabis. There's no one there with cannabis. And I'm on a panel with a nurse clinician about, for a multi-billion dollar assisted living company, because they're starting to realize, just like casinos spent a lot of money retraining their personnel on how to deal with stoned people versus how do you deal with drunk people.
Yeah.
Think about those
Forefront,
yeah.
our client.
Yeah. We have a small investment in Forefront, but we love them.
I love
we
them.
We love them. They're great guys.
But they have relationships with senior centers where they send like vans to take seniors. They will educate seniors on the use of cannabis.
And then they'll help them get it.
And then
from Forefront.
100%.
Yeah, so this is, but that's broadening the tent. Brilliant. But that's the change, and that's the change that's coming is, if you look at the consumer data study that New Frontier did in partnership with MJ Freeway, which is now called Akerna.
Our client.
Yeah, okay. So
you keep doing it, and it's just too easy.
Yeah, it's. Do I have Ann? You know what I need? I need a shock button where I can collar him and make Lewis
and just shut him up.
Yeah, it's great. So, but it's interesting when you look.
I'd invest in that.
When you look when you look at that consumer study, the fact is, 55-year-old, they are going to be using the plant the rest of their lives. They're going to be spending money on it, and they're not going to go to an assisted living facility that's going to stigmatize them. And when you look at that, and we have this 4-part thing called legalization. Most people think legalization is the last step in normalizing. It's actually the first step, because people who are scared to go to jail do not engage in certain behaviors. So legalization leads to a destigmatization, which leads to a colonization of the mindset, which leads to a normalization. When you look at those 4 things, we're kind of in stage 2, because a lot of people are starting to jump into the legalization side. Like it's moving on, so I can now take the risk.
Okay, we got to stop because you got to go.
Yeah.
This was awesome. We got to have you back, man.
Hey, my pleasure. Honestly, I thank you so much for even wanting to hear from us. I really appreciate it.
Dude.
Oh my God, of course.
Big fan.
Yeah.
Okay, we're going to let you go.
All right, thank you very much.
Thank you.
Thank you.
Thanks,
Thank
Ann.
you, Mitch, and thank you, Max.
Thank you, Max.
Our thanks to Mitch Baruchowitz, the managing partner of Merida Capital. Find them at meridacap.com. meridacap.com. That's meridacap.com, or on Twitter at Merida Cap. And as always, if you want to find us on Twitter, we are at @the_greenrush, or on Instagram at @thegreenrush_podcast, or feel free to drop us an email at greenrush@kcsa. And don't forget to subscribe to The Green Rush in your favorite podcatcher. One take, Shay, one take.